Hi, welcome to session 3. In this session, and it's a short one, we are only going to look at what constitutes a simple buy signal and a simple sell signal. In the markets, if you don't know when to buy and when to sell, you could end up losing a lot of money. And we are today going to look at the simplest of signals that will give you an insurance. Mind you, it's an insurance, no guarantees, about when to buy and when to sell. So let's get started. What I did was I plotted a 100 DMA, 100 day simple moving average. And this is how it looks. The chart I have is a daily chart and it's a 1 year chart. And it is on Nifty 50. It's on 1 day NSE. Okay? After drawing the 100 day moving average, I found that over here there was a sell signal and a buy signal. When is a buy signal? When the price chart crosses the 100 DMA or any moving average and crosses and goes above the 100 day or any moving average. Similarly, the sell signal is whenever the price chart crosses downwards and cuts across the 100 day moving average. So here is another buy signal. So much I hope you have understood. So what I would have done had I been, this is just an example. Please understand that you can use this on any chart. A chart of garam masala or wheat or rice or gold or aluminium or platinum or diamonds, as long as you have a price chart, and a price chart which you can set the various parameters as per your requirement. As I said, I've got the daily chart and I'm using the 100 day close simple moving average. Now the buy signal occurred here. This is where the buy signal occurred, where the price moved from below, crossed over the 100 DMA and went above. That's a buy signal. Earlier to that, it gave a sell signal. So over here you can see that it first gave a sell signal and immediately gave a buy signal. So I am assuming that we are now taking the example from the buy signal. So once I did that, I bought over there. This is a sell signal. A price chart moves down, crosses over, goes below the moving average. That's a sell signal. So I would sell over there. In other words, I would buy in the red line here and sell at the green line here. The red line is approximately 22,250 or 300 and the sell line is approximately 24,500, or in other words approximately 10%. A 10% gain between 5th June and 22nd October. A few months. In a few months, I increased my portfolio value by 10%. Now we will discuss much later in the series what do we do after our cash gets released and there is no buy signal for a long time. The next buy signal only occurs over here, as you can see. So what do we do? That's something that we will discuss both in asset allocation as well as what to do with the liquid money, that funds that will lie in our bank account. Okay, that's much later in the series. So this is the simple explanation of a buy and a sell signal. Now, a buy and a sell signal will vary depending on whether you have a 100 DMA or a 20 DMA or a 200 DMA. Let's look at what happens to the same chart. This 100 DMA, I go and change this settings to, let's say, 400 DMA. The 400 DMA did not tell me to buy sell anytime here. It tell me to sell here and buy back, sell here, buy back. Now the same thing if I did it for a 50 DMA. Now you can see there is a buy signal here, there is a sell signal here, and then there is a buy here, but immediately sell at a loss. Then again it goes on, it buys here, sells here at no profit, no loss, and again buy here. Now in this case, your broker will make a lot of money because you keep buying and selling. He charges you brokerage. And if you really look at it, you will not make any huge difference of money, as I will show. If you look at it, you would have sold here, which is approximately over here, and you would have bought over here. Now you can see you would have bought a little later, so the price has gone up, and you would have sold a little earlier, so you would have made a little more here. As you can see, there's hardly big deal difference between this, but it gives you a lot of tension. The whole idea of investing is that your money should work for you rather than you work for your money. So each person has to decide what moving average he or she is going to follow. I like to look at the big picture and I stick with the 100 DMA on the 1 year chart or the daily chart. If you look at the 5-year chart, you see it is much easier to work with the 100 DMA. You would have bought here, somewhere here, and then you just be holding and enjoying your holiday, and you still not sold. Market has gone up and down, so what? You are not encashing. As long as you don't sell, you neither book a profit nor do you book a loss. It's just paper. All the value that you see in your portfolio is only on paper. So this is a chart that gives you peace of mind. Now you should choose your own individual chart, which stock, what is the DMA, when is the buy signal, when is the sell signal, that suits you and your temperament. There are only two factors that operate in the stock market. One, and most important, is fear. Fear is in fact the primary and probably the sole factor according to me. Because the second factor, greed, is a corollary of fear. For example, the fear of losing out is greed. Why didn't I catch the topmost peak? That's greed. These are all not possible, realistic in real life. Because we live our daily lives, we have other things to do. We can't be sitting at the computer throughout the day from probably 8 a.m. till 4 p.m. I mean, what a colossal waste of a day. We have lots of other things to do. So, the whole point here is that you saw that a simple buy signal is when the price crosses a moving average and goes above it. And a sell signal, a simple sell signal, is when the price crosses the moving average going downwards below the moving average. That's the essence of this particular thing. Choosing the parameters of how many are you going to look at 1 year daily or weekly or 5 years and decide all that, that is an individual choice, and we will dwell on it a little bit later in the series. Okay, thank you.